Today, we will look at the skills and techniques for investors across the different life stages, which is quite timely. Whether you're in your 20s, 30s, 40s, or beyond, or even 70, the decisions that you make today, as he said, will determine the options you will have tomorrow. I'm here from Absa Bank, Kenya, and I'm honored to speak to such a dynamic audience, where we also have, I know, some emerging investors, we have professionals, we have entrepreneurs who represent the engine of Kenya's next wave of growth. From where I sit in financial markets, and which I know I've seen a lot, one truth has always played out. Wealth doesn't emerge from that single decision that you make. However, it comes from those small, disciplined, very consistent decisions that you keep doing time again. So today, I will unpack some practical skills across the various life stages where you are, and we'll use an approach that will touch on three things: your income, your goals, and investment choices. Now, for those who are in their 20s, and again, we'll not ask people to raise their hands, just to see who are in that stage. Normally, in that particular stage, we normally call it the foundation of your investment or your basis for growth. So mostly you find yourself at a point where you've gotten your first job and you started getting that income. So I remember the time I got employed, started my journey in Absa, or back then in Barclays. So we were a group of us, and the job then was direct sales rep, where we had to go and sell and make money for the bank. So the discussion we had amongst ourselves, that first salary, what do you do with that salary? Right? So there was the tradition that yom mshahara ya kwanza, for some people, unaweza peleka kanisa. For some, you can give to your mom. I don't know how comes it's not the dad, but anyway, let's call it to your parents. Or you can decide to party the money away. So for this conversation, and about investing, let's start from your second salary. So when in your 20s, you've gotten your first job, and probably right now you're earning small amounts, maybe 50,000 and all. And with the commitments that sometimes the money can seem to be little or not enough. However, in investing, we look at starting small. You don't have to say that you need to have 100,000 all of a sudden, and now that's when you're going to do your investment journey. You start small, you start low risk. It's always about building the habit of investing or saving. It's not about wealth at that particular time. It's about bringing the small amounts that you have so that you can be able to grow that money. Some of the investment instruments that are out there is what most of you have heard, the money market fund. Good for beginners. Reason being, you can throw any amount. You have 5,000, 1,000, 10,000, and again, you can still access it easily. Within a day or two or three, you'll be able to access. A number of companies have that particular product. We do, as Absa, we do have a good, fantastic money market fund. And the aim for any investor is to always make that deliberate choice decision to always set aside funds and start saving in a money market fund. Now, if you're doing 5,000 and in a year you've accumulated and you are plus 50, then you start having options in terms of growing and diversifying your investment. Now, you can look at other investment options. The Treasury bills then becomes a perfect fit. You probably get a better return, or more or less you diversify your investment. The beauty, the central bank has made it easy for investors to be able to invest in government securities. I think I saw even recently that you can even now invest and even make the payments from your mobile phone. So it's quite easy for you and it's quite easy for investors. So in your 20s, do the money market fund, accumulate your money. Look at the situation. If you're investing 5,000 on a monthly basis, and assuming you place that money in a deposit that is probably earning 10%, in about 50, 55 years, you've accumulated roughly 10 million. Right now, that 5,000 will not look big, but again, time will always be the truth. Now, you're in your 30s, right? In your 30s, that's when responsibility starts, right? But wakupata familia, that's the time you start almost getting engaged. You're starting to have a family. And again, mostly, maybe for most of us, not all of us, in your mid 30s, as you head to 40s, kuna watoto, and the family grows. So at that particular time, you are looking at stability and growth, right? So if you're in that journey where now cash flows or your money has increased, then something again needs to speak to that in terms of wealth and investment. So what you do, you have something called divest or diversification of your portfolio. In your 20s, sana, you are doing your money market fund, maybe it's build a bit, you're doing your treasury bills. Maybe for those who've not invested, you probably do between 90 days all the way to 1 year. So they are quite short term. But right now, cash flow has increased, and now you have a bit more. So what investment opportunities do we have when you're in your 30s? The additional things you can do, again, you can diversify into bonds. The beauty with bonds, they offer a higher return. So if you look at treasury bills returns right now, maybe just to give context, the 364, the 1 year bill is going for around 9%. The 6 month or the 3 months in the 8% level. And if you're looking for the money market fund, you probably get a similar return. And you might feel now you need something to generate or increase your wealth. Bonds will start, is one of the ventures. You most likely start getting double-digit return from bonds. You might get 12%, 13%, depending with the time you're investing. So if you were doing bonds at a particular point last year or earlier this year, the returns were in their topish 15%, 16%, and at some point 18%. Even for what we call infrastructural bonds, where you do not pay tax. Another investment option you can delve into is what we call unit trust. Unit trusts do offer a mix of investment opportunities, where you can do a straight investment for an interest rate return. You can do a mix where there are equities involved. You can do a mix of so many things with unit trusts. Now, there's an option for something we call equities, AMA shares. Just checking, how many of us invested in shares last year? None will know shares, not this year, last year specifically. Good. So for those who keep track of companies, and again, for those who don't want to, if you look at where Absa Bank share was trading last year, it was around 11 shillings. So if you had set aside 100,000 worth in terms of value in Absa, today it is trading at around 23. You've doubled your money. You'd have 200,000 easily. Capital appreciation, you've not in factored in dividends. Safaricom, where was it trading last year? 13, 14. Where is it trading right now? 30. Again, you could have easily doubled your investment from 100 to 200. Let's move to the penny stocks. Kenya Re. Where was Kenya Re trading last year? 1 shilling and 50 cents, actually lower, even below a shilling. Way below a shilling. Where is it trading this year? Averaging 3 shillings. So if you had 100,000, you'd be 3 times more in terms of value for your money, just within a year. Another investment company, Kenya Power. Where was Kenya Power trading last year? 1 shilling and 50 cents, thereabout. Why is it trading this year? 14 shillings. That's like 14 times. If you had 100,000, you'd be having 1.4 million. If you had 1 million, you'd be having 14 million. The good thing with the securities market, or what you call sometimes the stock exchange, it's quite liquid. And again, what they did this year, they reduced the lot size. So before, for each lot, you'd have to buy 100 shares minimum. That has been reduced. So you can just buy 1 share. So in as much as you have as low as whichever amount you have, you still buy share. Make it easy for you to invest in that. At APSA, we have another product. It's called an endowment policy. It's in the basket of what you call life insurance. So what it does, again, you can put your money in whichever stated frequency, either monthly, quarterly, semi-annually, or even annually, and get roughly 40% growth over time. And let me tell you, you're in your 30s. Time when in your 40s is when you appreciate you had done some investment. So if you had investments or savings of, say, approximately 10,000 every month, that money will grow in 10 years' time, or whichever period that you want to extend the endowment policy to and serve you. That's the time unasema, I'm in your 40 and you wanted to build a house and you're wondering, do I start borrowing? But when you get that payment at the maturity point, that's the time you appreciate those small savings in an investment that guarantees you. With our policies, or maybe any other policy, that policy gives you additional cover, either during death, either during disability. We let the policy continue, assuming you've passed on, unfortunately, as the policy holder. Tunasemanga, that policy will continue till maturity without additional contribution. So for what you are supposed to have been, the money been gotten, it will still mature at the same time. And the stated beneficiaries, when you're doing the policy, will still be paid. We have other fantastic products, like the education policy still at APSA. So even in that is, na bado hujapata watoto, we still encourage you to do that. Start it. Plan it out. Hatusemangi let a birth certificate, because eventually on maturity for us, we pay you or your nominated beneficiary in case you are not there. Sawa sawa. So it still works for you. So by the time unapata watoto, maybe una plan out in maneno ya college or university you want to pay for them, you will still get money. Hautashinda ukisema maneno ya harambe or something and those inconveniences. I don't know how many of you have heard of the new gold ETF. Umesikia about new gold ETF? So at APSA, we have another fantastic product. So for those who've been following news, you think you've noticed gold has been appreciating globally, right? So there are aspects of de-dollarization where countries are looking towards diversifying away from what you call these fiat currencies and dollar and looking at gold. So big economies, corporates are increasing their holdings on gold, and that particular asset is really going up. So what we've done at APSA, we have what we call the exchange traded fund. The exchange traded fund, maybe to simplify it, it's an index or more or less like a share. There you can go to the stock market and say, I want to buy X number of shares for Absa Bank, in the same way you can be able to buy gold. But in this particular case, you do not buy the physical gold. It is an index that tracks the real gold in the market. So you can actually take advantage of that, go through your broker again, the normal way you would want to buy a share, and again, invest in that. Now, we also introduced this year another exchange product, another exchange traded fund, ETF. It's called the Satrix MSCI. So what is that? So for some of us, we always relish these big companies or the corporates. So the likes of NVIDIA, the likes of your favorite Facebook, Meta, Tesla, and all that. And so many companies in developed markets, both in the US, in the UK, in Europe, in Asia, Japan. So what we've done, we've taken quite a good number of companies in different sectors, IT, technology, information technology, education, health. We then put them in a basket. Zote tunaziweka pamoja, right? And then we derive a price. So in case you are here locally and you want, because I know there's a lot of hype with AI, we placed that in an index and it is listed at the NSE. Same thing, in case you want to participate, again, you can go to your broker, you just need your Citi's account and you can be able to participate in that. And the growths are phenomenal. So in your 30s, as you head to your 40s, those are the investment options that you can look at in terms of increasing your wealth and your investment. Now, what happens as you get into your 40s? So this is where now you really need to accelerate, but again, at the same time, you need to protect the investment. One of the things you can be able to do, and we've done with our customers, if you're having your portfolios, you need to look at how you can be able to balance them out. For bonds, for those who traded bonds, bonds pay coupons or interest semi-annually, twice a year. So what customers do mostly as you get to that particular age, you buy multiple bonds. You can buy 6 bonds, different bonds, all paying different intervals. In a way, you can have a bond holding where you're getting interest paid on a monthly basis. Kuna bond moja inalipa during these intervals and all that. We're able to give you a good mix so that as you get into your 40s and all that, you can sit down and say you have another source of income that is quite consistent, that is going through on a monthly basis. We're able to do that for you. Look at high quality equity, stocks or shares. So this is the point you're saying. Now, as you get into your 40s, you do want to invest in companies that are quite stable, that probably are now paying higher dividends and are less, more speculative. What we had also, and something we do for our customers, is estate planning. So apart from letting you know what we can be able to do for you in terms of growing your wealth, we organize platforms, we have webinars where we have our customers and then we can take them through estate planning. It's about succession, about doing a will. Because remember, all these investments you're doing them for yourself, but again for your family. So what happens when you're not, or decide to check out early and your investments are still running? So we do organize programs, platforms to give you that particular education. We have plans when it comes to retirement. Again, we have products for that, life insurance, and we are happy to take you through that. For some customers who are in their 40s and looking for more risky investment, we have what we call offshore investment. So for offshore investment, this is where we are able to invest in foreign currency and we are able to give you a return that is high above the market. So if you're looking at dollar deposit, maybe in a commercial bank, you probably get, maybe 3-4%. But in this structured offshore deposit, you probably get levels of 9%. And again, even for some products which we have in our basket at global markets, you even get north of 9%, 10% plus. So those are for customers who would want to take more risk, but they actually pay a higher return. I know with the growth of AI, I know most of us, if not all of us, have heard about crypto. So there's regulation that did go through the Virtual Asset Service Providers Bill, which is now an act. We are waiting for regulation to come through from CMA and the CBK. Our parent company, ABSA SA, did get into partnership with Repo. It's a crypto-based company that supports transactions on blockchain. So again, when we have regulation here, definitely we'll be able to see what we can be able to do for our customers locally. So as we think about where to invest and how to invest, normally most of us have this question: what should I invest in? Because I know there are so many things that you've touched on in terms of opportunities. But the right question each and every one of us should ask ourselves is, what can I afford to risk, right? Tolerance for risk is personal, and it's based on an individual's, say, probably age, income, and responsibilities. At ABSA, we do help our customers during that particular journey. And when we're doing that, three things definitely come into play. What are your goals, timelines, and your risk profile? Those things have to align. Investment then becomes quite intentional and not emotional. So what are those techniques then can we play or use when we are running our investment journey? One, whether in business or you have your salary, pay yourself first. Don't spend. If you decide you need to be investing X amount of money, please do that. For some of us, the way you decide I'm doing a tithe of 10%, do the same thing for investment. Secondly, automate your investing. Do standing orders. At ABSA, we have a good platform. You can just have that set instruction such that at a particular point, either monthly, for those who get money monthly or weekly, have an automated way of doing that. Diversify. Try to spread your risk across various platforms. So assuming you're deciding you want to invest 100,000, you can say maybe 20% to be on the risky side, maybe 30% to be on this, but do diversify. Keep emotions out of investing, right? So when the market rises, when the market falls, don't panic. Last year, the market was saying there's no money in the equities market, right? Shares in Ashuka Indio. And they were saying it doesn't pay. Warren Buffett said, be careful when others are greedy, and be greedy when others are fearful. So you need to understand the cycles of asset classes and get to know there's a time they'll go up, there's a time they'll go down. So don't use emotions when investing. Review portfolio annually. So when you look at what you're going to do in terms of investments, it's always good to sit down and have a look at a particular point and say, these are my investments. Do I need to adjust them? A number of things have changed, say responsibilities or your income. So always set time aside to review your portfolio. So at ABSA, we are an institution that looks at building wealth, not just selling products. It's about helping people make their informed choices. This definitely aligns with our purpose at ABSA, which is empowering Africa's tomorrow together, one story at a time. So for customers, we support in a number of ways. On investment, for those who need solutioning, for their working capital, we have a lot in terms of basket of offering. So when we look at all these, we look at where we can be able to partner and align with the theme. We want to help people so that they move from being just consumers to investors, from workers to wealth builders, from spenders to planners. As we look ahead, every life stage offers a unique opportunity to build wealth if you approach it with clarity, discipline, and good information. I would want to encourage each of you to take a small step today that your future self will thank you for. Whether it is starting your first investment, reviewing your retirement plan or exploring opportunities for growth. Thank you to the Abojani team for creating this particular space. And to all of you for being part of Kenya's next generation of wealth leaders. Thank you.